Hello from Chicago, Alan Nuckman high above the trading floor at the CME Group, talking energy, focus on crude. Asset unwinding continued. Now let's remember, we had a key reversal in stocks on Monday. All-time highs in the S&P actually closing lower. Since that time, we've seen an unwind in stocks. We've seen gold come down. We've also seen crude back off from the $59 multi-year highs that we saw on Friday. So looking at the action today, oil's at two-week lows, 56.35, last trade down $1.25. So a 2% drop, a little bit more unwinding, slumping to support. Now, we talked about this high at 59. Now, it's 2 Fridays in a row that we got to the 59 level, backed off a double top there. Now, what I want to watch and see is if we come back and hold and support at that 55 level. That was the top of the year-long 45 to 55 channel, which targets 65 eventually. But right now, let's see if we can find some support here at this 55. Markets often come back to their breakout points, and that will be a significant support level to keep an eye on. Inventory data today came out. API numbers, crude added, was a 5 million barrel draw in crude oil. That's good. That should be interpreted as positive, but not so fast. 9 million barrels were added in gasoline versus 1.5 million barrels expected. So a surprise boom boost build in the gasoline sector. That gave the market some pause and some concern, causing a bit of a sell-off. Let's also talk about some news that came out today. Reuters had a poll of 30 analysts, and they raised their average projections in crude oil, the price projections for next year for 2018 to 54.50 a barrel, 54.78, I'm sorry, a barrel from 52.50. So that's about right where we are now. We're above that a little bit, but they're saying the average price for next year in net terms, they're raising their estimates in their forecast for the future now that we've been able to hold these prices steady. Also, OPEC is thinking that demand growth in Asia will cut global inventories and bring us back to the 5-year average. So both of these things can be viewed as a positive. But what I want to talk about here is the net price picture and looking to see where we stand. It comes back to these same benchmarks that I've been talking about over and over again. 55 is a support below because that was the breakout point, and 59 is this double top above. So let's let the markets do their things and figure out where we stand based upon the price action, either a breakdown below or a breakout above 59 and a upside target of 65. Summarize today, down $1.25, 56.35, January crude finish.